Right now, as you're watching this, a SpaceX rocket is in the process of launching. And in the very same week, $500 billion moved through a single day of stock trading. This is what a normal week looks like for SpaceX now. Here's the full picture. Today, SpaceX is launching its 58th Starlink mission, carrying 24 more satellites into orbit from Vandenberg Space Force Base in California. At this point in the company's history, a Starlink launch barely makes headlines on its own. SpaceX now launches roughly every few days, a pace that would have been considered impossible for the entire global launch industry just a decade ago. But this routine-feeling Sunday launch is happening in the middle of anything but a routine week financially, the $500 billion swing. On Tuesday this week, SpaceX stock traded in an intraday range from $187 to $225. That's a $38 swing within a single session. When you multiply that swing across SpaceX's total outstanding shares following its IPO, you get a staggering number, roughly $500 billion in market capitalization movement in one day of trading. To put that in perspective, that single day's swing alone is worth more than the entire annual economic output of Norway, more than Austria, more than most countries on Earth produce in an entire year, moved in and out of one company's valuation between market open and close. Despite that volatility, SpaceX completed its first full week as a public company without its stock ever falling below the original IPO price, a genuinely rare outcome for a company of this size going public. What's driving the volatility? Much of this week's turbulence traces back to one filing. The formal SEC paperwork for SpaceX's acquisition of Cursor, the AI coding startup, became public this week, and it revealed real financial numbers for the first time. Cursor generates approximately $4 billion in annualized revenue, with $2.6 billion of that coming specifically from enterprise accounts rather than individual developer subscriptions. The acquisition price is $60 billion, paid entirely in SpaceX stock rather than cash, with closing expected sometime in the third quarter of 2026, pending standard regulatory approval. When a newly public company announces an acquisition this large this fast, markets often react with exactly the kind of volatility we saw this week, investors rapidly repricing what the combined company is actually worth. The Nasdaq 100 detail. Here's a detail that deserves far more attention than it's gotten. SpaceX is currently on track for index rebalancing that would add it to the Nasdaq 100 around July 7th. This isn't a minor technical footnote. The Nasdaq 100 is one of the most widely tracked indices on Earth, underlying trillions of dollars in passive investment vehicles, index funds, ETFs, and significant portions of global retirement and pension accounts. When a stock joins an index like this, every fund that tracks it is required to buy shares automatically, regardless of whether the individual investors behind those funds made any active decision to invest in SpaceX at all. In practical terms, this means that sometime around early July, millions of ordinary retirement savers around the world, many of whom have never thought about SpaceX stock specifically, will suddenly own a piece of it, simply because of how their index funds are structured. A live rocket launch happening today, a $500 billion single-day swing this week, a confirmed $60 billion acquisition with real numbers now public, and an index inclusion in July that will pull retirement money from around the world directly into this one company. Most businesses measure a big week by one major announcement. SpaceX just had all of this simultaneously, and treated the rocket launch as the unremarkable part. Of the oven, exuding its tempting aroma, everyone gathers around to enjoy it together. The joy in their hearts is hard to express in words. Come and try making your own chocolate cake.